Hi, Michael. How are you?
Hey Olga, how you going?
Good, thank you. It's been a little while since both you and I have been on the one screen. We've been chatting to lots of different people. So I thought we both thought today it would be great to catch up and give a bit of a projection looking backwards on the last couple of months and our thoughts on what's going to happen in the next few months.
Certainly, I know from my perspective, I don't think the ATO has certainly taken a beat, if I can put it that way. Perhaps maybe a slight pause for the upcoming election, but at the end of the day, it really is business as usual. The ATO are going very hard on businesses that have debt, trying to get them compliant. We've also been hearing, and I'm sure you've heard this as well, that it's not only just focusing on those businesses that have ATO debt, they're also looking to, I think, send a message to the broader community, the compliant businesses, that it's important they stay compliant and don't, sort of fall into that trap of using the ATO as a, I guess, a cheap source of finance, even though we both know it's not a cheap source of finance.
Yep, absolutely. I think there was a lot of chatter both in our office and also externally around whether there was going to be a pause with the election coming up, and then what might happen after the election. But as we've discussed, there was a whole round of DPNs that got sent out on the 4th of April that are just about to expire, and we saw a number of clients that received those DPNs. So as you mentioned, there might have been a very slight pause, but it's absolutely recovery as per usual. And it's my view, and we can have a chat about your view. A lot of people have asked me whether I think the recovery and the ATO's approach will change depending on which political party get back into power. But I think given that the collectible debt, the reported debt, is still sitting at around that 53 billion mark, I can't imagine, no matter which government gets back into power, that there'll be any change of the active recovery stance that we're seeing within the ATO at the moment.
Yeah, look, no, I agree 100%. We've seen this we've been doing this long enough now. We've been through a couple of governments, and it's rarely much of a difference because, the ATO is a bureaucracy. They've got their own KPIs and things they need to meet, and the government of the day doesn't generally impact that greatly. It really is a case of, as you say, there's that large number, there's $53 billion, and we both know it's probably in excess of 60, but that's the latest reported figure that needs to be collected. They need to get businesses compliant. And the only way they can really bring that number down is either by collecting it or by winding businesses up. We both know one takes anywhere between 2 and 3 years, depending on how good your negotiator is in terms of getting payment terms. But in terms of winding up and bringing that debt down, that's only a couple of months. And so, sure, the HO obviously would prefer to collect the money, but their real priority is to get that down. And as I said, send that message and get the community back into a tax-paying, I guess, state of mind, which probably slipped out during COVID.
And I think one of the things that we haven't really talked that much about, but I think it's worth touching on, is that is the reported collectible debt. So that doesn't include the non-lodgements. And every now and again we hear clients say, "Oh, I've been told not to lodge. I don't want to lodge. The ATO don't know I've got debt if I don't lodge." But the importance around lodging is huge. And the ATO do know if you haven't lodged and you've got outstanding returns and you've got outstanding debt, it doesn't mean you're safe or that you're protected from any further recovery action.
No, you're 100% right. I mean, I'm hearing accountants saying to me they've got, if Baz is 1 month out of, behind, they're getting phone calls from the ATO saying, "Look, there's an outstanding Baz." So you're right, the ATO do know, and as we both know, there's huge legal ramifications in not lodging, particularly under the director penalty regime, and the fact that if a business doesn't lodge, then the director not only becomes personally liable but can't have that penalty remitted and avoid liability by going down, whether it's a small business restructuring process or some other insolvency event. They're stuck with it, and the only way they can get out of it is causing the company to pay the debt or pay it themselves.
The other thing that we're also seeing, which isn't a new trend, it's probably we've been seeing it for the last 3 to 6 months, is one of the factors that the ATO are looking at when we're negotiating payment arrangements, and also the remission of interest, is a client's past compliance and a client's
Mm.
history. And I think that's more important than it's ever been before. And that compliance includes how many late lodgements there've been. So if they're taxpayer hasn't lodged for a long time, the ATO are now taking that into consideration when we're applying for payment plans and we're applying to get rid of the interest and the penalties.
Yeah, and I think too there has been a practice in the past of lodging and maybe always lodging and maybe lodging a little late or a few days, or worse, lodging and continually having these sort of string of payment plans to a lot of businesses sort of see it as a way of sort of almost funding the business by saying, look, we'll lodge, we might be a week late or 2 weeks late, but we lodge and we always pay it. And sometimes we have to put it into a payment plan. But again, it's exactly what you're saying. It's creating that poor lodgement history and that poor compliance history, which particularly with remission applications is not the main thing. But if you've got good grounds but a poor compliance history, it's very difficult to get those across the line at the moment with the ATO.
And there's a lot of factors. I think one of the things we do is we don't go into a client's portal at all. We look in the background and do a detailed review within the ATO, and people are often surprised what is happening behind the scenes. Not everything is listed on a portal, and some of that information that we're looking at and we're gathering is that real behind the scenes things, like the amount of defaulted arrangements, the amount of cancelled arrangements, the amount of late lodgements. So there's so much more that goes into a client's history and profile rather than just a snapshot on the portal as well that we need to look at.
Yeah, and it also raises another really interesting point is, again, a lot of people would say, well, we're not hearing anything from the ATO, so everything must be okay. And there's that
Yeah.
old no news is good news. Well, at the
Mm.
moment, no news is not good news, because that means that there are definitely things going on in the background, and there are things that are coming out and going to come out. And the no news means they don't know that this is happening. And one of the things, as you'd be well aware, when we actually do our review and our deep dive within the ATO for a client, is to find out what's on the horizon, what's coming next from the ATO in terms of recovery action, so that it's not a surprise. But it'd be nice if the ATO were giving constant warnings, and in many cases they are, but they're getting ignored. But the reality is, you just can't assume nothing's happening, because the one thing we know is something is definitely happening, and they are moving through that process, whether they're aware of it or not.
Absolutely. One of the things I used to hear is, oh, well, if the ATO come knocking or if the ATO call me, I'll worry about it then. Whereas I'm sure you give this advice as much now as I do. It's not a matter of if, it's a matter of when. And the other really interesting thing within the industry, and a lot of accountants use it and lawyers as well, we talk about orange warning letters or red warning letters. I've certainly seen a decline in the amount of orange letters and red letters we're actually seeing before there's automated recovery action, like credit reporting or even direct to penalty notice. And there hasn't been any warning letters. There hasn't been the orange. There hasn't been the red. So I think that complacency, oh, well, when I get an orange letter, I'll deal with it.
I'll deal with it.
You can't rely upon anymore at all.
No, you can't. You can't. And look, one of the things, and it's been, and we'll touch on it just very briefly, it's been in the press quite a lot now, is that also owing money to the ATO from 1 July is about to get a lot more expensive, and about 30% more expensive for businesses. And for those that haven't caught up on it, it really is no more complicated than prior to now. If we talk about now,
Yeah.
if you have interest that's payable to the ATO in paid, then it is tax deductible. So it kind of offsets to a degree the impact of the interest, even though it's it is at a very high rate, over 11% compounding daily. But that's now about to all change, and so whether that will drive sort of differences in behavior, I don't know. But I think at the end of the day, it's something that businesses do need to factor in. And there's always an old saying about don't use the ATO as a cheap source of debt. They've never been a cheap source of debt in my mind. And in fact, they're becoming more expensive. But more importantly on that, I think it's a very dangerous source of debt, because of what we know the ATO is doing. And as you've just correctly pointed out, with quite prompt and quite nasty legal recovery action that's often without any warning. And your bank's not going to do that to you, but the ATO can and will.
Yeah, and I think there's been a lot of chatter whenever there's new law. There's a lot in the press, and there's a lot of discussions around what a big impact it is and what a big change it is. I don't know whether it's going to change behaviour necessarily, because if you can either pay the debt or you can't pay the debt. But the biggest issue is if you've got outstanding debt, then you're at risk of further recovery action from the ATO. And the most important thing is to stop that recovery action. And as we know, the best way to, or the only way other than paying the debt in full, is to get into a payment plan. And once you're in a payment plan, then there won't be that you come off that 53 billion number. And once you're in a payment plan, the ATO will stop chasing. And once you're in a payment plan, there are more options for borrowing. So the payment plan, we often talk about it being a magic pill to help you move forward even while you still have that debt.
Look, I think that's right, and I think people talk about the call to action, and I think in some courses it's been is this a call to action? The changes around that interest, but no, I don't think it is. But well, it is. It is a call to action, but as you correctly point out, the main call to action is that you're not protected until you're in that enforceable payment plan. The ATO want what they call active engagement. Active engagement under the Act is in an enforceable payment plan. It's not enough to be talking to the ATO. It's not enough to be even making payments to the ATO. You're still moving through that recovery system and subject to recovery action. And so it really is a case of making sure that we, if you have that debt, you engage either directly through your accountant or through a specialist advisors like ourselves, but engage quickly and engage properly. So in many ways, the messaging hasn't changed. And if anything, it's probably become more urgent than ever because of the speed at which the ATO are moving in terms of their recovery action.
You mentioned voluntary payments, and it used to be people believed that if they were giving the ATO something and they were making small contributions or voluntary payments, that they would be protected. I had a client about a month ago. They came through obviously our inquiry line, and I ended up speaking to them, and they said, no, we're on a payment plan. And when we did our review, they were paying $1,000 a week, which is not an insubstantial amount, but they weren't actually in a payment plan. So even though they were paying their $1,000 a week, because they weren't in a payment plan, they'd been reported to a credit reporting agency. And they didn't understand why they'd got this further action when they were making all of these payments. So what we were able to do with them was get them back into a payment plan, which was actually less than the $1,000 a week that they were paying, and voluntary amount. The credit reporting got removed within about a week of that payment plan, the first payment being made. So then they've got creditors, they're able to borrow money again, they're able to get on with their business, they're paying less, but they're protected. So I think they'd sort of had that misunderstanding, but they weren't protected before, even though they were paying a substantial amount to the ATO.
Yeah, brilliant, brilliant. And that's such a good outcome. It's funny, I had get one last, about 2 weeks ago now, and they had about just under $800,000 in debt. It's a smash repair company, and they excuse the pun, but had been smashed by COVID, and they'd had a long-term payment plan and got themselves back on track, and they were trading profitably, but unfortunately with a change within their bank and needing to verify an account, a payment got missed, and they weren't aware of it, and then the ATO cancelled all their payment plans. When their accountant went back to put the payment plans back in place, they now had an income tax return that was out of date, and in fact they'd found another old one that was also out of date, and so the ATO refused to do anything. They'd had a garnishee notice in the past, and so were paranoid about that and really worried about recovery action. And so the accountant obviously knew us and rang and sort of said, look, this is kind of a bit above my pay grade. Is there something you can do to deal with this? And so we were able to engage with the ATO, agree a time frame to get everything up to date. But again, I had to sort of emphasize to them the only way to be protected is to get this done quickly. So we had to get them and move very, very, very quickly to get the lodgements done and the payment plan done. And we did it within sort of a couple of weeks, and the ATO were comfortable with that. But again, it's that anxiety that gets created if you have that debt, because you don't have that protection unless you actually have that arrangement in place.
And there's huge anxiety. It doesn't matter on the level of debt. There's another client that we're in the process of helping with 180,000, and they have had a warning letter from the ATO. They did get a warning letter, but they're very, very concerned about the expiry of that. And I think it is really important to know with the collection activities of the ATO, there is no guaranteed protection when you've got an outstanding debt, even if you're talking to them, even if you're making the voluntary payments, until we can get them into a payment plan. And people are so stressed in that period. We see it all the time with the calls and the emails, but the answer is a payment plan. and there is nothing that can be done in that period. So it's a matter of, we talk about eating the frog, and facing it head on and not burying your head in the sand, because there's nothing else that can be done in that period if you can't pay the debt in full, which does put a lot of people between a rock and a hard place. But then when we get them to the other side, which it can only be a matter of 2 or 3 weeks, so moving quickly is the answer for those people.
Yeah, and something we probably haven't touched on for a while, and it's certainly been a bit of a flavour of the more than a flavour of the month, probably the flavour of the last 12 months is the small business restructuring
Yeah.
program, and it's interesting because I've had 3 clients that have come through in the last 2 and a bit weeks. They've gone to a small business restructuring practitioner, they've put the proposal together, and the ATO has refused it.
Yeah.
And then they've said, well, look, where do we go from here? And luckily, those practitioners know us, and they said, well, look, maybe, and again, like most of these, it was ATO was the biggest issue. They sent them to us, and we were able to get them into an arrangement. But it was interesting because as part of that, they have to actually sign or actually have to pass a declaration to say they're insolvent or likely to become insolvent to qualify. And so we're now having to face with the ATO to say, yes, they did that, but they can pay it and everything. So I think one of the things that comes from that is that we also are seeing that the ATO are voting much more against these now, particularly if there are directors' loans. One of them had intercompany loans, and so the ATO is looking at that a lot more closely. But I think businesses really need to be very careful. The days when the ATO were voting for everything, I think, are well and truly gone. And they have a lot of, and people have heard me bang on about, the downsides of going through an SBR that are unexpected. But another unexpected one that they won't know is that it will damage their ability to go back to the ATO for a payment plan, and they need to be aware of that. So, that's really important. Really, really important.
Absolutely. I've seen a lot for the very same reason with director loans that the SBRs are being voted against. And when we talk about director loans, I had another client go, "Oh well, I just didn't take a wage, but I took money out, so it doesn't really count." But the way that it is classified, it does turn up as a director loan, and it depends on the amounts. I've had other people say, "Oh well, the super's just mine, so that doesn't count either." And then also, "Oh well, if I borrow against the house, I'll borrow to rob Peter to pay Paul to pay out the super. So I'll pay 200,000. I had one pay 200,000 out in the super. They've got personal liability, so they were only saving $30,000 to do an SBR. And then when we did a review, there was actually 80,000 of interest and penalties. So by a payment plan, not having to borrow against the house, not having to pay the super back, but getting them into a 3-year payment arrangement, and then when they're compliant, looking at the interest component, was actually going to be a better outcome, saving them more money, not worrying about the director loans, not pulling more cash out of the family home, was getting them to the end result. So again, when we talk about quick fixes, I think during COVID, and that's when SBRs came in, that's what it was there for. But we've certainly seen a shift in, as you said, everything just going through the gatekeeper, everything passing with a green light to the ATO really looking properly at SBRs now.
Yeah, and I think doing them as they're doing any insolvency thing. And I had another one that came through last week, and they're an engineering company. And again, they had a debt. It's going to be best part of about $850,000, and the accountant wasn't able to help the director with what they were doing. They tried to get payment plans in place, and unfortunately, the director went on to Dr. Google and ended up in the hands of a pre-insolvency practitioner who I know, and they were convinced to go down that route, and they're actually going to do a pre-pack and new entity, yada yada yada. Fortunately, the funder I know who said, look, if you do that, we can't continue to support because the way it's being done is not appropriate and everything. And we're able to catch that one, but that one could have gone very, very pear-shaped very, very quickly. And again, we've managed to get them into arrangement. They've got a long-term arrangement. Their big issue is they, in order to keep the business going, had some high cost short-term loans that were killing the cash flow. So they needed about 6 months to clear all of those. So we're able to get them time with the ATO to do that, and then a long-term one and out the other end, and we managed to get the ATO to remove some of the interest and penalties as well, just as a bit of a bonus. So there's almost always the solution that doesn't need an insolvency
Mm.
practitioner. About 3% of our clients need to go down that route, and that's fine. But beyond that, I think it's always important to explore other options.
And when you talk about the funder, we sort of like skip over it because we understand the jargon and we understand that. But the real impact of that story of what you were just saying is if they'd gone down the SBR, the funder would have pulled funding. What would have been the impact on that business for that funder to have pulled all the funding?
Yeah, well, well, what they would have had to do, and they would have then been in the hands of the pre-insolvency practitioner, is get new funding. And the cost of that would have been horrendous, or closed. Now, they wouldn't have closed because they have a very good, solid business, but their funding costs would have gone through the roof because suddenly they end up into a different tier of funding.
And so the idea of an SBR is so that they can continue trading and that they can continue on in the hands of the owner. Now, if they're going to lose their funding, it sort of defeats the whole purpose of what an SBR is there for. So I think also as well, I've had a couple of clients come to us that have been contacted out of the blue. Someone's obviously got hold of a list where there's credit reporting or other things happening, being sold the pipe dream. So I think it's just a matter of getting the right advice. There isn't a cookie cutter approach. Every single client is completely different depending on their funding, depending on their structures, depending on their insurance, depending on their director loans, depending if they're super outstanding. There's so many factors that influence what is going to be the right solution for a client, that they're speaking to experts in every field about what that solution might look like.
Yeah, and it's tricky too because most directors, and you know this as well as anybody that we speak to, are in this situation, are incredibly stressed. They don't know who to trust. They don't know what they're being told, which bit's right and which bit's wrong, and they, and they just don't know where to turn. And so sometimes the person with the sort of the loudest voice or the,
Mm.
the shiniest presentation wins over, which may or may not be the best outcome, and often isn't.
Yeah, absolutely. If you had a crystal ball, I talk about my magic wands. If you had a crystal ball, what do you think we're going to see in the next 3 months?
Oh, look, I think in the next 3 months, and I'd probably move that out to the next 12, but certainly in the next, because I think it's a similar answer in that I think it's going to be, in terms of obviously we look through the lens of the ATO, I think it's going to be business as usual. I don't see the ATO pulling back anytime soon because they are still have those sort of dual things that they're trying to achieve: A, to get the collectible debt down and businesses compliant, and B, to change, I think, the attitude of businesses generally around the payment of ATO debt. And so I think we're likely to see this continue. And look, I often say to people, if this is kind of where we were prior to COVID, and then during COVID, the collection activity was down here, we're kind of here. I don't think we're going to get back here anytime soon. I think it's going to, but it will sort of, I think, come somewhere between those. But I think that's a good 12 months away at least. What
Yeah,
about you? What do you
absolutely.
think?
Yeah, I completely agree, and I think the other factor we've got to take into consideration, with the ATO's collection activities now, is the automation. So I
Mm.
think that's something that's very new, and I think it's something that's here to stay. So I think just the phone calls and the warnings and the if they come knocking is absolutely a thing of the past. And I think the collection activity, and the automated collection activity is here to stay as well. And that real mind shift of moving from it's a cheap, easy small business bank, and that's one of the reasons for this implementation of the new law, is to change that attitude and change people's habits over a period of time. So I don't see any of that collection activity being pulled back now to get that change moving.
Yeah, I think it's the final thing I would sort of say is, and I've said this 1,000 times, is, don't worry if you don't engage with the ATO because they will definitely engage with you. And I
Yeah.
think that's the key around this. That you need to get into activity. Otherwise, head in the sand just is the worst thing you can do at the moment.
Yeah, absolutely. And if you have been told no, we get so many clients, and so many referrers that have come to us and said, well, the ATO's told me we can't have a payment plan, or a referrer's tried and can't get them a payment plan. Please let us try again. I think that's the other message. We've seen so many people get no's in the past that we can then help. And that stress is just huge when they think that there's no answers. So keep looking and keep trying to find the right help. So even though there is that quite aggressive recovery action happening, there still is help there for so many people.
I often say you've got to engage quickly, but you've also got to engage properly. And I think
Yeah.
that's where the real value comes into this. There are legal practice statements, there are boxes that need to be ticked in order for that case officer to be able to help. And if you miss one of those, then unfortunately it is a no. But if you know the boxes and you know how to sort of structure it so that the case officer can get to a yes, then they will. And that's the real value in all of this.
Yeah, absolutely. Oh, it was great to chat to you today, Michael.
Yes, same.